Thank you very much, Paul, and hello to everybody. I'm Adam Smith, the global editor for Kallanish. I'll be giving you a brief update of what's happening in the Indian steel market. Indian crude steel output fell 20% on month in April, according to the latest world steel data, as mills diverted oxygen supply away from plants for use in medical purposes to tackle the rapidly spreading second COVID-19 wave. Output at most mills was also curbed for this reason in May, but the situation is expected to improve in June. Indian output in January to April nevertheless still rose 27% on year to over 38 million tons, with capacities ramping up to meet the jump in demand, which had been delayed by the pandemic last year. Due to the second COVID-19 wave, Indian steel consumption should be lower in the second quarter versus Q1, but not as low as during the COVID-19 hit Q2 2020. Auto and white goods demand is seen being most impacted by the new pandemic wave. The situation will delay the strong recovery of recent months in Indian steel consumption following last year's lockdown-induced standstill. The government will redirect spending towards healthcare and virus response, and some steel-consuming projects will be curbed momentarily. Nevertheless, unlike the first wave where lockdowns were nationwide for several months, the second wave micro-containment zone measures are more localized and should not last as long. In the meantime, Indian mills are looking to exports amid a strong international market in order to offset the weaker demand from flat steel consuming sectors at home, much like they did in Q2 last year. International prices provide wide margins for Indian primary steelmakers, while China's removal of export rebates and possible HRC export tax implementation will further support Indian competitiveness on the international market. This is expected to support global steel prices in the medium term, which Indian mills will exploit. Moreover, it is likely to make steel imports into India less competitive, thereby supporting the domestic market. However, high freight and shipping costs and container availability issues could be areas of concern that hamper the Indian export push to an extent. Indian iron ore prices, meanwhile, are being supported by high global iron ore prices and steel prices. Flat steel price increases, the high cost of imports, and tightness of iron ore availability, especially of higher grades. Prices are, however, unlikely to increase much further as iron ore supply gradually improves further in the second half of the fiscal year through March 2022. As you can see here, this is a graph showing the development of Indian crude steel output in recent months. And April actually recorded quite clearly the lowest tonnage since October 2020, which is when Indian crude steel output returned to pre-COVID-19 levels. In its March quarter earnings report, Tata Steel said export markets offer attractive opportunities and that steel prices should remain buoyant amid strong demand recovery, pollution control-driven curbs in China, and elevated raw material prices. The firm's deliveries in India in the fiscal year through March 21 rose 2% on year to over 17 million tons, with exports surging 52%. JSW Steel, meanwhile, said the current second COVID-19 wave in India may have peaked, but the timing of the Indian economy reopening will follow only gradually after cases decline. In financial year 21, steel sales fell 1% on year to 14.9 million tons. Jindal Steel and Power said China's removal of export rebates, strong focus on reducing carbon emissions, and ongoing geopolitical tensions are likely to provide continued support to the current steel upcycle. Strong export markets bode well for steel demand, despite the slowdown in construction activity in India. FY 21 steel sales rose 20% on year to 7.3 million tons, an annual record, with exports surging 226%. Significant Indian capacity expansions are expected in the coming years. JSW Steel, for example, expects its Dolvi plant's capacity doubling to 10 million tons per year to be completed in September. The 8 million ton per year pellet plant at its Vijayanagar works was fully commissioned in March, and production is underway. JSW's board has also approved the 5 million ton per year expansion at Vijayanagar to 17 million tons per year of crude steel, which is scheduled for completion in early 24. Tata Steel, meanwhile, has restarted its 5 million ton per year Kallanish expansion project and expects this to be completed in financial year 24. The pellet plant and cold rolling mill complex are under construction. Jindal Steel and Power plans to expand its crude steel capacity to 15.9 million tons per year in the fiscal year through March 25. This will take it into the territory of current capacities at India's largest steelmakers such as JSW, Tata Steel, and Steel Authority of India. But of course, by that point, they would have advanced their capacities further and become even larger. JSPL's expansion will be driven mainly by the 6.3 million ton per year capacity addition in Angul Phase 2, and iron ore pellet capacity will simultaneously rise to 21 million tons per year. That's all from me. Thank you very much. If you have any questions, please feel free to contact me. Thank you.